Good morning. Please, if you can hear me, drop a comment. If you can hear me, good morning. Hope you had a great weekend. If you can hear me loud and clear, please drop a comment. Can you hear me? You're welcome. Can you hear me? Can you hear me? How was your weekend? If you have any question or any pair you want me to analyze, let me know in the comments section. What pair are you considering trading today? I'd like to know in the comment section. You're welcome to today's live stream. Good morning, Mr. Isaiah. Good morning, Mr. Amuda. Mr. Amuda, it's been a while. How are you doing? It's been a while. How are you doing, Mr. Amuda? So before we look at the chart today, I want to share, there's a good news I have for you guys. And I want you guys to take advantage of this wonderful opportunity. Okay, I want you to take advantage of this wonderful opportunity. There's an ongoing promo. There's an ongoing promo on Aura Markets platform that I want you guys to take advantage of. You guys don't want to miss this opportunity. Now with Aura Markets, you get reimbursed when you lose your money in trading. You get reimbursed when you lose money in trading. Okay. This is a wonderful, a great offer you guys should take advantage of. If you lose up to $100, you get reimbursed. If you lose $100 in your trading account, you get reimbursed. So I want you guys to take advantage of this opportunity, okay? Can you guys hear me? Can you hear me? Can you hear me? Aura Market introduces a limited time promotional offer. So it's for a limited time. So you should act now while the offer is available. You should take advantage of it. Allowing eligible clients to receive reimbursement for trading losses up to a maximum of $100 under the rules stated below. What are the rules? Participation in this promotion constitutes full acceptance of all terms. So what are the terms and conditions? First condition, promotion is available only to new clients with fully verified trading accounts. This promo is available only to new clients with fully verified trading accounts. Second condition, account with completed KYC as per mentioned in the KYC section. What that means is that you need to upload your documents, your passport, your proof of address documents, and selfie. Okay, your accounts need to be verified for you to qualify for this offer. Clients who meet minimum deposit of $100 in account. So the minimum deposit is $100 to access this offer. You need to deposit $100 into your trading account. And you need to open a reimbursement promotion account. Client must register for the promotion by sending an email to. So if you are interested, you are expected to send an email to support@auronmarket.com. Okay. After opening the account, you send an email to. So when you go to auronmarket.com to open account, you'll see the option for reimbursement promotion account. After opening the account, then you need to forward a mail to support@auronmarket.com. This offer is available to account, one account per client. Multiple registration will be rejected. I hope you guys can hear me. Okay. So if you're interested, you should send a mail to support@auronmarkets.com. What are the benefits of this promotion? The company will reimburse trading losses up to a maximum of $100 as credit per eligible client. The reimbursed amount is not withdrawable, it's tradable only. So when you get that $100 credit, you can only trade with that $100, but you can't withdraw the $100. You can only withdraw the profits made on that $100. You get that? You cannot withdraw the $100, but you can withdraw, you have access to the profit you make on the $100. Can only be used for live trading and cannot be transferred between accounts. So if you have two accounts with Auron Market, you cannot transfer the funds in that account to another account. That's what it means. Any profit earned by trading the reimbursed amount is withdrawable, subject to normal withdrawal conditions. So those are the terms and conditions, and those are the benefits of this promotion. If you have any question, just drop it in the comment section. Okay, if you have any question, drop it in the comment section. Okay, so let's go to the chat. If you have any question, drop it in the comment section. You can also send me a message on WhatsApp. Okay, so let's go straight to the chat. Okay, so we'll start by looking at the calendar for the week. Today is Monday, December 8th. There is no major news. No major news expected today. So let's see for the week. Let's see what we have for this week. I think FOMC meeting will hold this week. FOMC meeting will hold this week. Okay, so today, Monday, there are no major news. Then tomorrow, Tuesday, by 4:30, Australia will be releasing its cash rate and also rate statements tomorrow by 4:30 a.m. Nigerian time, and by 5:30 a.m. press conference will hold Australia. Then by 10 a.m. Nigerian time, the Bank of Japan Governor Yoda will be speaking. And ADP weekly employment change will be released from the United States tomorrow. The time is not given. And by 4 p.m., JOLTS job openings data will be released. These are high impact news. These are high impact news. And trading the dollar pair before this major news is very risky. So if you're considering trading before this major news are released, you should be very conservative. You should be very conservative. Okay. Then on Wednesday, 2:30 p.m., United States will be releasing its employment cost index. And by 3:45 p.m., Bank of Canada rate statement will be released, and also overnight rates. And by 4:30 also on Wednesday, Bank of Canada press conference will hold. And also by 8 p.m. Nigerian time, federal funds rates will be released. FOMC economic projections, FOMC statement, and also FOMC press conference will hold on Wednesday by 8:30 p.m. Then on Thursday, Australia will be releasing its employment change and also unemployment rates by 1:30 a.m. Nigerian time, and by 9:30 a.m. Swiss franc will be releasing its monetary policy assessment and also its policy rates. And by 10 a.m., Swiss franc also will be releasing. Okay, they'll be having a press conference. The Bank of Switzerland, they're having a press conference. Then Thursday also by 2:30, United States will be releasing its unemployment claims, and on Friday, Great Britain will be releasing its GDP data. So we've got a lot of major news to be released this week. So we should expect high volatility in the markets this week. High volatility on Australian dollar, JPY, CAD, United States dollar, and Great Britain pounds. Okay, so that's it for fundamentals. So let's go straight to the chart. Let's start by looking at on DXY. DXY uh, all through last week was bearish. Last week was bearish, and what can we see on the charts? Okay, what can we see on the chart? You can see today. What can we see on the chart? You can see the low of last Friday candle has been swept. Okay, the low of last Friday candle has been swept. We think it's liquidity. Okay, the low of last week has been swept. Okay, it has been swept, so it's likely G dollar index would be bullish. Dollar index is likely going to be bullish today because liquidity residing at the low of last Friday candle has been swept. And also, if you apply your Fibonacci, you can see that price is currently at a discount area. And if you go to 4-hour right now, you should be able to identify a bullish reversal pattern on a 4-hour time frame. Okay, so the previous 4-hour candle closed as a doji, and the current 4-hour candle most likely will close as an hammer. If it closes as an hammer, I think that will be the right time to look for buys on the dollar. Okay, if the current 4-hour candle, this will close in the next 30 minutes. If it closes bullish, then one can risk buying dollar. One can risk buying dollar. That's my take for the dollar for today's market. I am bullish on the dollar. My bias for the dollar today is bullish. Okay, my bias for the dollar today is bullish. Okay, so let's look at yen basket. Yen has been bearish for several weeks now, and I think let's see what we have on the weekly and the daily time frame. Okay, so as you can see, yen has been bearish for several weeks, and like I told you guys several weeks ago, that yen most likely would come through this fair value gap. Okay, so it's likely going to fill this fair value gap. This would be a very good area to consider buying yen. At the moment, yen is still bearish. Yen is still bearish. Okay, there's a high probability the liquidity residing at this previous low, because after the formation of this hammer, this hammer, most retail traders would have bought, and their stop losses will be residing at this previous low. So there's a high probability they will sweep this low before going bullish. Okay, there's a high probability they will sweep this low before going bullish. And after sweeping this low, since there is a fair value gap below this area of liquidity, this level of liquidity, there's a high probability they will fill this fair value gap before going bullish. So that would be a very good area to consider buying. Okay, if you want to buy yen, wait for price to fill that fair value gap before you buy. That's my take on yen. So for today's market, I am bearish on yen. I am bearish on yen. For today's market, I am bearish on yen. I am bearish on yen. Okay. Yen is going for that low. Yen is going for that low, this low, and also this fair value gap. That's where yen is aiming for. Okay, so let's go to the charts. I'm going to be using MT4 for my analysis. Okay, so let's start with GBP USD. GBP USD. So you can see GBP USD has been bearish, though price has been in the range since the market opened. I think this was the first candle for today's market. Okay, yeah, this was the first candle for today's market. So we'll say what we have here, we'll say that GBP USD has been in a range since the market opened. it has been in a range. But I would love to see GBP pull back to this zone before going bearish. This is where I'm considering selling GBP USD. This is where I'm considering selling GBP USD. I would love to see GBP USD pull back to this zone before going bearish. Okay, that's my expectation on GBP USD. I would love to see it pull back to this zone before going bearish. Okay, remember my bias for dollar today is buy. So if I'm buying dollar, I should be looking for sales on GBP USD. All pairs that have US dollar as the counter should be bearish. It should be bearish. Okay, so that's my expectation for GBP USD for today's market. I would love to see it pull back to this zone before going bearish. I hope that is clear. If you have any question or any pair you want me to analyze, let me know in the comments section. Okay, so let's look at Euro USD. Euro USD has already pulled back to my area of interest. I did this analysis on, I think it was on Saturday. I did this analysis. Okay, so as you can see here, we had there was sweep of liquidity at this point. Liquidity resided at this previous high was swept, and after price swept, the market swept the liquidity residing at this high. You can see there was a shift in market structure at this point. There was a shift in market structure, and price after the shift in market structure, price had to pull back to a premium area. If you apply your Fibonacci from this swing high to this swing low, okay, you can see price pulled back to a premium area before it sold. That was on Friday. Yeah, before it sold on Friday, it pulled back to a premium area, created a new high. And as you can see today, the market has swept the high of this candle. You can see. So price had pulled back to a premium area, swept the liquidity that was residing at this previous high, because after the formation of this shooting star last week, most retail traders would have sold and their stop losses will be residing at this previous high. So what they did this morning was to go sweep the liquidity, all the stop losses residing at this high before going bearish. So if the current 4-hour candle closes bearish, if it closes as a shooting star, that would be the right time to look for sales on Euro USD. If the current 4-hour candle closes bearish, I would be selling Euro USD and my stop loss would be at this point. The high, the previous high, this previous high, that is where I would set my stop loss. So let's see how many pips that is. Okay, that's about 20, 30 pips. 30 pips. So I'm going to use 40 pips as my stop loss. That is 10 pips above this high. That is where I'm going to set my stop loss, and my first TP will be this low. This low will be my first TP. That's about 60 pips. So 40 pip risk for 60 pips reward. That's a good risk reward. Okay. So that's my take on Euro USD. I am bearish on Euro USD today. Technically, Euro USD is expected to sell. Technically, Euro USD is set for sell. Okay. All right. We'll look at gold in a few minutes. We'll look at gold in a few minutes. Next pair I want to look at is GBP JPY. Let's start with the weekly time frame. So GBP JPY has been bullish and it's still bullish. Okay, the buyers won't rest until they sweep this liquidity residing at this high. They will not rest. The buyers will not rest until they sweep the stop losses. Okay, the institutions will not rest until they sweep this high here. There are a lot of buy orders here. A lot of buy orders. Remember, when you are selling, your stop loss is a buy order. When you are selling, your stop loss is a buy order. So a lot of retail traders have expected to sell after the formation of this shooting star, and their stop losses is residing at this previous high. So GJ will not reverse until this high is swept. Okay, so GJ is still bullish at the moment. It's still bullish. It is still bullish. So if you buy from the current market price to this level, that's about 100 pips. 100 pips. Okay, GJ is still very bullish. You can see GJ is still very bullish. It is still very bullish. It's still very bullish. Very bullish. Still very bullish. Okay, so you can see this is the first candle for the day. We had an inverted hammer. We had an inverted hammer, and if we apply our Fibonacci from this swing low to this swing high, if you apply the Fibonacci from this swing low to this swing high, I think price pulled back to the discount area. Swing low to swing high, you can see price pulled back to a discount area, which is below level 50. Inverted hammer candle formed, and the next candle closed bullish. So this is a bullish reversal pattern. This is a bullish reversal pattern. Now, after the formation of this inverted hammer and this bullish candle, I believe a fair value gap was created. A fair value gap was created. Let's go down to 1 hour. Okay, so we have this fair value gap here. We have this fair value gap it's created here. So this would be a very good area to consider buying GBP, JPY. Okay, this would be a very good area to consider buying GBP, JPY. Let's go down to 15 minutes. I believe there's still a fair value gap on 15 minutes time frame. So you can see this fair value gap. These are the areas you should be considering buying GJ. This would have been a good entry for GJ. You can see the pattern we had here. This is a bullish reversal pattern. Okay, this is a very good pattern. This would have been a very good area. You can see liquidity residing at this lower sweeps. Now, at this point, you can see there's a shift in market structure. Shift in market structure has occurred here. And after shifting market structure, price is expected to pull back to a discount area. Price is expected to pull back to a discount area. So if you apply your Fibonacci from this swing low to this swing high, you should wait for price to pull back to a discount area. You can see. So buying GJ at the current market price is at a very high risk, because if you buy from the current market price, your stop loss, this is where you should set your stop loss. This is about 47 to 50 pip risk. 47 to 50 pip risk. But if you patiently wait for price to pull back to this zone, your stop loss from this point to this point is just about 30 pips. Just about 30 pips. And this would be a very good price. This would be a very good price to buy GG. Good. Good. So what can you see on gold? What can you see on gold? What can you see on gold? Let's start with the weekly time frame. So you can see last week candle closed as a spinning top. That tells you this week you should look for sales. Okay, so that's my take. That's my take. Last week candle closed as a spinning top, so you should look for sales. You should look for sales. Okay. If you also apply your Fibonacci from this swing high to this swing low, you can see that price is also at premium. And at premium, you're not expected to buy. You are not expected to buy. Though the long-term trend for GJ is bullish long term, short term, you should expect more sales on gold. On gold. Okay. I would only consider buying gold if this high, the high of this spinning candle, if the high of this spinning candle, if the market or a candle closes above the high of this spinning candle, that is when I would consider buying gold. But right now gold is bearish. The pattern we have here is a bearish pattern. This is a bearish pattern. And after the formation of this spinning candle, let's see what we had on daily. So you can see the pattern we had on daily also is a bearish reversal pattern. It's a bearish reversal pattern. It's a bearish reversal pattern. Price pulled back, swept the liquidity residing at this previous high. You can see this buy was to sweep the stop losses residing at this previous high. That they have achieved. So there's a high probability that gold would sell. Okay, so we want to see gold pull back to a discount. Price is currently at a premium area. We want to see price pull back to a discount. So if we're working with this range, if we're working with this range, we want to see price pull back to a discount area, which has to be below level 50. And below this level 50, you can see we have this fair value gap below level 50. So we want to see price pull back to this, at least this area. This will be a very good area to look for buys on gold. Or you could also work with this range. This range, you can work with this. Okay, swing low, swing high, and wait for price to pull back to a discount area. So for me, I don't think gold is set for buy. I don't think gold is set for buy. Buying gold at the current market price, as far as I'm concerned, is at a very high risk. Is at a very high risk. So patiently wait for price to pull back. Look for buys at a discount and look for sales at a premium area. That's my take on gold. If you're yet to give the video a thumbs up, please give it a thumbs up. Give it a thumbs up. And if it's your first time joining the live stream, please do subscribe to the channel so that anytime I come on live, you get notified by YouTube. Any question? Is there any other pair you want me to analyze? Let me know. Let me know in the comment section. If you have any question or any pair you want me to analyze, I think I've attended to all your requests. EU gold. Okay. We've also analyzed on GBP USD and GJ. Which other pair do you want me to analyze? Let me know in the comment section. If you have any question, let me know. Let me know. Let me know if you have any question. If you have any question concerning the promo, let me know in the comment section. If you have any question, let me know in the comment section. Ask your questions now. Ask now. Ask now. If you have any. For those of you just joining, who joined late, there's an ongoing promo. Oro Market is offering you $100 reimbursement. $100 reimbursement. What that means is that if you fund your trading account with a minimum of $100, if you lose that $100, you would get a refund. You'll get a refund. You'll get a refund. And with that refund, you can trade with the refund, but you can trade with the refund, but you cannot withdraw the $100 that will be credited into your account. You only have access to the profits you make on the $100. You only have access to the profits you make on the $100, but you cannot withdraw the $100 credit. Like I said, if you're interested, you should forward email to support@oromarkets.com. Forward an email to support@oromarkets.com. This is a great offer. You should take advantage of it. It's a great offer. So it appears there are no more questions. So I think that will be all for today's session. I appreciate every one of you for your participation. Mr. Isaiah, Mr. Joseph, Mr. Amuda, Mrs. Chibuzo, Mr. Olaiton. Appreciate you for your participation, Mr. Joseph. Thank you. And I wish you all a profitable trading day. Bye for now.